Have you ever looked at your savings account and thought, is this really all my money can do? What if I told you that you can invest in more than just stocks and bonds? What if you could tap into exciting, unique, and potentially lucrative investment opportunities that go beyond the typical options most people consider? Today, we're diving into the world of alternative investment strategies. These are options that can offer diversification, higher returns, and even reduce risk, all while giving you the chance to step outside the traditional financial system. But before we dive in, I need your help. If you want to keep learning about innovative ways to grow your wealth and become financially savvy, hit that subscribe button. I'm aiming to reach 1,000 subscribers, and your support will help this channel grow so we can dive even deeper into personal finance topics. Let's get started. What are alternative investments? So what exactly qualifies as an alternative investment? Simply put, anything that falls outside the conventional world of stocks, bonds, and cash is considered an alternative investment. These assets don't follow the same market trends, and because of that, they can provide opportunities to reduce risk or earn higher returns. But why would you want to invest in alternatives? Well, traditional markets, stocks, bonds, and even cash, can be vulnerable to inflation and market crashes. If you're only investing in these types of assets, your financial future might be more vulnerable than you think. That's where alternative investments come in. Some of the most popular alternative investments include real estate, private equity, commodities, cryptocurrency, and even things like art and collectibles. These options can give your portfolio a unique edge, but let's break them down one by one to see what each has to offer. Real estate, the classic alternative. Let's start with real estate, which has long been one of the most popular alternative investment strategies. Real estate gives investors the opportunity to earn both capital appreciation and passive income. Whether it's residential properties, commercial properties, or real estate investment trusts, REITs, real estate provides a diversified and relatively stable investment. Real estate has an undeniable track record of success. It's an asset that tends to appreciate over time. Think about it. Properties generally gain value as demand for housing and commercial space rises. At the same time, you can earn rental income, which gives you regular cash flow. But real estate is not without its challenges. You need a significant initial investment for property purchases, and you must consider ongoing costs like taxes, maintenance, and insurance. But for those who are ready to put in the effort, real estate can be a powerful wealth-building tool. Commodities hedge against inflation. Next, let's talk about commodities. Commodities include things like gold, silver, oil, agricultural products, and other raw materials that are essential to the economy. Commodities have long been a staple of alternative investing, providing investors with a way to protect against inflation and global market fluctuations. Gold, for instance, has been a trusted store of value for thousands of years. During periods of market instability or inflation, people flock to gold as a safe haven, which is why it often performs well when other assets are struggling. If you look at the past few decades, you'll see that gold has often outperformed the stock market during times of economic uncertainty. But commodities come with their own set of risks. They can be highly volatile, and prices are often affected by factors beyond your control, such as geopolitical events or weather conditions. That said, adding commodities to your investment portfolio can help hedge against some of the risks associated with traditional stocks and bonds. Private equity and venture capital, high risk, high reward. Now let's move on to private equity and venture capital. These two forms of investing are designed for investors who are willing to take on higher risk in exchange for higher potential returns. Private equity involves investing directly in private companies that are not publicly traded on the stock exchange. When you invest in private equity, you're buying a stake in a company, often with the goal of helping that company grow and eventually exit through an acquisition or IPO. Venture capital, on the other hand, focuses specifically on startups and early-stage companies. Venture capitalists provide the capital that startups need in exchange for equity. The potential returns can be massive if the startup becomes successful, but the risks are high. Many startups fail, which makes this investment strategy suitable for those who can afford to lose the money they invest. Both private equity and venture capital allow you to become part of the next big thing. If you've ever wished you could have invested in companies like Facebook, Uber, or Airbnb in their early days, then these types of investments might be something you'd want to consider. But remember, due diligence is key, and these types of investments often require a significant amount of capital. Cryptocurrency, the digital revolution. Let's talk about the digital revolution in the world of finance. Cryptocurrency. Bitcoin, Ethereum, and other digital currencies have taken the world by storm, offering an entirely new form of investing. The allure of cryptocurrencies lies in their decentralized nature. They're not controlled by any government or financial institution, which makes them attractive to investors who want to step outside the traditional financial system. Cryptocurrency offers the potential for massive returns, especially if you get in early. But it's not without its risks. The cryptocurrency market is incredibly volatile, and prices can swing wildly within minutes. There have been stories of investors making millions, but also stories of people losing their entire investment. For those interested in diversifying into cryptocurrencies, it's crucial to understand the technology and market behind them. Doing your research and being cautious with your investments is essential when navigating this new frontier of finance. Art and Collectibles, investing in passion. Now let's turn to a truly unique alternative investment, art and collectibles. The idea of investing in art, rare items, or even luxury watches might seem unusual, but for many, it has been a lucrative venture. Unlike stocks or bonds, the value of these items is often driven by rarity, historical significance, and cultural value. Rare art and collectibles have proven to increase in value over time, sometimes appreciating at rates higher than traditional assets. A Picasso or a vintage Rolex may be worth millions today, but it could be worth even more tomorrow. For those who have a passion for art or antiques, investing in these areas offers a chance to combine personal interest with financial growth. But just like with any investment, knowledge is key. You need to understand what you're buying, its market trends, and potential future value. Peer-to-peer lending. Lend and earn interest. Another interesting alternative investment is peer-to-peer, P2P lending. P2P lending platforms allow individuals to lend money directly to borrowers, typically in exchange for interest payments. This is different from traditional bank lending, where financial institutions act as intermediaries. P2P lending allows you to lend money to individuals, businesses, or students for a range of purposes, from personal loans to business funding. The allure of P2P lending is that you can earn higher interest rates than what you'd get from a savings account or traditional bond investment. However, the risks include the possibility that borrowers may default on their loans, so it's important to diversify and assess the creditworthiness of borrowers. Diversify your portfolio. To wrap up, alternative investments can be a great way to diversify your portfolio, reduce risks, and earn potentially higher returns. Whether you're looking into real estate, commodities, private equity, cryptocurrency, or even art, each of these options brings unique opportunities to the table. The key to successful alternative investing is diversification. Never put all your eggs in one basket. A well-balanced portfolio with a mix of traditional and alternative investments can help you weather market volatility and capitalize on emerging trends. Before you dive into any of these options, do your due diligence and consider consulting with a financial advisor who can guide you based on your financial goals and risk tolerance. And remember, this journey is all about growth, both financially and personally. So if you want to learn more about growing your wealth with smart alternative investments strategies, make sure to hit that subscribe button. Together, we'll continue to unlock the potential of your financial future.